Creating value for members. We talked about capital and we talked about allocating capital to members. I just want to give you an idea of right now we have 3 strategies for allocating monies to members' capital accounts. The first is, and our goal, once upon a time we used to distribute all the earnings based on how much earned premium people wrote. What we found out is when somebody writes $14 million premium and has $60 million losses, but you're allocating profits to them, that doesn't make a lot of sense. We did that. That's what the bylaws called for from the time the company was formed until 2006 when they were suspended. And we came in and we set a goal, and it's taken us a long time to get closer to that, but I think we're in pretty good shape there, which is to fairly reward members based upon their participation in the long-term profitability that they generate. One of the things that this has really helped me with is if I have members who are using us to smooth their results and they're not having claims, we're now putting that capital into their member capital account. It's getting assigned that way. So we first, for every member that has capital, we allocate our current book yield to that capital every year. For 2017, we'll be allocating 3.5% on, I think it was $1.3 million, Mike, that LARM had. So that's one piece of the capital. So it's as if the money was sitting in your account for that. It's not for liquidity, but we do that. The second thing we've done is we looked at the 86 to 2006 period and said, you know, the allocations of earnings to members don't align with the profitability that they generated. We thought that was a problem. And so what we've done is we've set up a structure where we're looking at those members, and we set this up that were under-allocated during those periods, and we're taking a significant portion of our ongoing earnings and we're allocating those to members. LARM and Maryland were 2 that stood out. LARM did insurance business with us from 2002 to 2008 roughly. About $5 million in premium and $11,000 in losses. You had extraordinary experience, but you only had $680,000 of capital, and almost 400 of that had been paid in when in 2008, and I'll share that in a minute. And then what we said is for those members that are continuing to perform and really support the company since 2007, we're looking at profitability on that, and we're assigning based on their shares of the profit, the theoretical profit that they're generating. So we think that's really done, it's been very positively received by members. And it's really helped us to look at situations like I was talking about with these underlying layers. You can hold it on your book and take all the risk, or you can put it with us, and if it's profitable, you're going to get the benefit of that. If it's not, you've got the benefit of reinsurance coverage. So it's kind of a best of both worlds concept. That's sold well. And I mentioned we hold a significant part till we know what's going on. This slide's very busy, and I think I'm actually just going to skip it because we've talked about the concept. Here's LARM's assigned equity. LARM all paid in, including the allocation, was $377,000 of capital. Through 2008, December of 2008, under the old capital structure and everything that had been allocated, NLC had added into the LARM capital account a further $256,000, bringing it to $633,000 in 2008. After we rewrote the bylaws, we came in, we created this, what we call the priority allocation. That had to be made before any other form, but we wanted to build up an unallocated capital bucket. So from 2009 through 2014, we allocated our investment earnings rate to the $633,000 that LARM had, and compounded it every year. So these are the compounded figures that came. But in 2015, I was able to convince the board we'd gotten to a position that we can really begin to do what I told you we do, which is to go back and correct the injustices of the past. And you'll see that in 2015, we went from $42,000 being allocated to $219,000 allocated to LARM's capital account, raised it from $886,000 to $1,005,000. And so that was, let's see, that's 15, took it to $1,005,000. 16 was $270,000, taking it to $1,376,000. And in our meeting in December last week, We agreed to allocate $361,000 additional to Alarm's capital account. This is your money. That's the way we look at it. There are liquidity questions that I'm going to be dealing with Mike and Gerald, but
Bill, I'm just going to make a quick comment. During our various discussions, there's two things that I really told you that I wanted to see happen. Number one, we keep our oar in the water and stay with your company. I think that's
your
necessary.
company.
Yeah, the two companies.
Okay.
Our capital account is $1.7 million. LARM has none of that in our assets.
Correct.
And this noon when we had lunch, you advised me we would work on that and we'd go through the state insurance department and get that so that LARM can use that as an asset.
We are hoping to do that for you.
Right,
and
it's going to
Kentucky.
take some work and some months to get this achieved, right?
Yes, absolutely.
See, that's my two main concerns.
Yep. And I've been trying to get us to that point. I've got a favorable position from my regulator to want to do it. I have had interest from both the Kentucky State Insurance Department and and Nebraska, who have encouraged us. The question that I've got to work through with the support of LARM and with our Kentucky member is what are the provisions that we have to come up with that will allow the regulators to allow you to treat it that way.
Right.
And so that's it's a bit of that's where the negotiation and discussion goes with that. The board of NLC Mutual is interested in seeing this happen, as long as we're not giving away too much. That's and so ultimately it will require that. But we will be coming back to you, and that's a key part of what we'll be doing.
I'm sure that the LARM board is doing the same way.
Okay.
And Gerald, you may remember in the meeting of August 25, 2016, which was the last time I gave an NLC Mutual report, I was allowed on the agenda. At that point, you said, well, we'll have Bill Heberton here in December. He was invited in December.
I understand that.
And then give us other dates.
Between that and
Yes.
now, he's here now.
Yes, and so all I'm saying is, I really appreciate the fact that he was invited because he's been trying to get here for a face-to-face meeting.
Absolutely. The thing is, our board needs to know this. We need to know where we're at. And then we need to work forward.
Absolutely.
Okay, thank you.
And I just want to say, NLC Mutual's been working on this. This is not something that is a new concept. They've been working on it.
Okay, Kim?
Well, the other things, other questions.
Yes, I was going to ask, is there other states that have this as admitted assets? Is it just that we're weird ones? Or?
The vast majority
Okay.
are able to account for it on their statements. One of the things that makes you different is you do report to the State Insurance Commission. Kentucky also does. Many of the states and pools do not. Some of the accountants allow it, some of them don't, but the majority of our members, 2/3 of our members, do account for the buildup in their balance and reflect it in their balance sheet to their members.
So in other words, we're dealing with state regulation.
We have to deal with a unique state regulation
Okay.
that's at the tough end of the game, and that's what I have to try to help overcome to fix that. If we can do that, it solves the problem
Yeah.
in a material way. Okay?
Okay, thank you.
Yeah, and just quickly, I mentioned earlier, we decided we weren't going to return any capital. We needed to build capital for health. We're looking at what we really need to carry into the future. What we did think we were growing fast enough that we did begin some capital return strategies in 2016 for members that had extraordinary large shares of our capital. We have a couple members that if we allocated the earnings today based on it, would be near $20 million of equity in the company. It's just too much. So that's there. The other thing is we did start a dividend program for purchasing members. I wish that I'd been successful a few years ago, because if we had, I probably would have been cutting a dividend check for about $75,000 based on that dividend program. It would have been a reduction. So instead of putting all the 360 into the capital account, 75 would have been distributed. So that's there now, yes.
Has NLC Mutual ever considered doing something that I know another mutual similar to a pool offers, and that's continuity, membership continuity credits, so that when you do your renewal, we actually get a credit back. It's another way, rather than dividends, you get a credit for having.
Well, yeah, the dividend program for us could be used either as an offset to premium, okay, it could be paid out directly, or as several of the members have liked our return, because it's better than what they get on their own, they're just reinvested it in the capital. So we've tried to create, we're dealing with 27 different pools with 27 different sorts of circumstances. We're trying to find a balance in that. And, I need input on that, and I've got a very reasonable board as we put ourselves into the position to talk about that. So going forward, we continue to be there to respond to reinsurance. But to be successful, this is where the real change comes up. We spent the better part of 2 years, 2 years of discussion, Steve Craig helping lead, along with an outside consultant, a process to really vision what I refer to the board as NLC Mutual 2.0 in the Apple vernacular. But what I really say is I don't want 2.0, I want 5.0. We've been operating one way for so long, we need to go several iterations. And we have made really, really important steps to that. First, we needed to get out of being seen as just reinsurance, as a commodity reinsurer. We have to be seen as a center of expertise for our members, and we need to be viewed as a trusted partner. That means we have to do a better job getting out. We also needed expertise. We need more people that can carry the message and help members do more. Particularly for small members that don't have the staffs, don't have the expertise. This is huge. Okay, and we'll talk. So with that as a goal, that really sets the tone that we're trying to create. The second thing we need to find more ways to interact with members, and we're finding that these things are allowing us to do that. And as we interact in areas that aren't related to reinsurance, we're getting more opportunities to talk to people about what's important to you and to think about reinsurance. And we're looking to develop new partnerships. And this is the most critical one at the end of the day. To your question or your thoughts, Mike, on the comp and your scare, we've got to develop a base of information that makes us a go-to source that members, other major insurance companies want to come to and be part of, because they'll have something they can't have in their own world. And I'll talk to that in just a second here. Really significant additions to staff. Some of you have been to risk meetings with know Aaron Ryan, who was integral and been very, very helpful in risk. Unfortunately, Ann Gergen, who runs AGRIP, used to work for me, but chose to take off to greener pastures with a commercial insurer before taking on AGRIP. Brian Drawn is Director of Information Technology. He's been in the North Carolina pool, but he's available as a resource for technology, for cloud-based. He's taken us into the cloud, and he is running a major data initiative that is going to be available to all members that the board has authorized at the December meeting, and I want to talk a little bit more about that. Chris McKenna has come on, 10 years as a consulting actuary, he's going to be leading pricing in the long run, but he's also available for consultation, review, discussion with members, and based on presentations that he's done, people are already calling him, asking him to come out, talk to staffs, boards, help them learn and understand at no cost to members. So these are some of the things. We also developed several other programs, but we partnered with Beasley, the medical program. I'd like, though, to end this real quickly with the leveraging data program. And I'm going to try to run through this quickly, but essentially, what we've come and through our investigation to find is a vendor. They go by the name of Domo. It's a group out of Utah that has an incredible facility to take in data in the cloud from any source of data, whether it's in your systems, it's publicly available data, it's anything that could relate to your cities. Bring it together and consolidate it where you can use it. And so the vision that we had is if we can encourage pools to do this, our member pools, and some of them are already starting to go down this road where they're taking all of their claims data, all their premium data, anything that you have publicly on Nebraska cities that you want to bring it into a cloud, and as long as you can relate it to one another through name or anything else, it can become a usable piece of information for you to use in decision processes. I think the board thought I was half crazy when we started talking about this, and I started thinking I was. And then Ryan came on, and not only have we shown it's possible, we demoed this to the board at the meeting. I've got league directors and people begging us to come into it now. The idea is we would fund this on behalf of members. Each member, each state, would have its own sovereign database, have all of the tools and all of the capabilities that we would have internally. So LARM would have its base, Georgia would have its base, New Mexico would have its data. And as you do, we can work where we can either provide support to people to help use that, but the other thing that's really interesting about this is, as the various pools come into this, and many of the pools now have data analysts, if one data analyst in one pool can figure something out and look at something, it can be replicated in another pool within minutes. And so what we're finding is if Oregon with their data team, and Connecticut with its big data team, and Texas with its big data team is doing studies and bringing information together, we can share with you what they're looking at, what their observations are, how that's looking, and allow you to look at that in your own site. And it's something I think is really interesting. The other part is we can pull together the information and the data as the pools allow us to into an aggregated national data set that's giving us the ability to have a pricing and competitive pricing advantage going forward. More information than virtually anyone else has in the world on public entity business. And we think this, and I've talked to reinsurance and potential reinsurance partners, we think this is the key, Mike, to answering the question, what happens when the work comp market starts to walk away? If we can actually show them what's really happening, real hard numbers that they can grasp on, we can come up with the best solutions that are available. If they're just operating out of fear based on small numbers, they're going to run away. And so this is both an investment in helping our pools to manage themselves, to learn, to do things, but it's also really designed to try to promote more capacity. Yes?
does the pool have to use NLC Mutual for the workers' comp?
No, there's no obligation in this project. This is all lines. This is, once we've said it basically it boils down to this. The cost of unlimited data storage per member is $20,000 a year. There are 5 user licenses that go along with this software that is amazingly intuitive. I have no training on it, and I'm already doing things. I mean, literally. And we showed the board, and they were seeing this at the example. You, LARM, would have the ability to have unlimited data in the cloud, 5 user licenses with the data technology, and it will all be born right now. The goal is for NLC, out of all that investment earnings, to bear that. We want to do that to encourage members to put the data in, use it, and work with each other. And I can tell you with the 4 pools that worked through this data project with us, they have been blown away by the inter-pool discussions and learning that this is creating.
I just saw the pilot with the 4 pools. It's extraordinary what they've been able to glean from this and what they're able to basically search and then figure out where their real losses are as opposed to what they thought they were. It's incredible.
I can cut development triangles. One of the things you talk about, Mike, where are good retentions? What does it look like? How do losses develop over 250,000 or over 400,000, over 5? What should we know? Most pools can't do that. They don't have the technology. This allows us to do that for you, to help you think about where you should buy reinsurance. So we think that this changes the whole thing to where we hope, we're not necessarily going to place it. You're going to have options to go in the external market or work with us. But we think we can really be of value to members by being there, letting members interact with each other in a way that they never had. AGRIP, NLC Risk, they're great organizations. They bring up a lot of things, they talk about things. But they've always had the problem of nobody actually knows whose is doing better. How do they really compare to each other? How do claim reporting patterns compare? What's one pool doing? Why is it different in this pool? What are you doing that's making it better? And this is what the membership got so excited about.
Do anybody have any questions? Because we're getting close on time.
No, but I'm going to these questions that
Yep.
I gave to you, why don't, in the essence of saving time, why don't you take them back?
Okay.
Send Mike an email, everybody here's got them, and he can distribute your answers out.
Surely,
that would
absolutely,
work
happy to
very
do
well.
that. I do have one last thing though that I need to do. We have a custom at NLC Mutual recognizing members for the years that they've been with us. Generally, these plaques are awarded at our board meeting to the member representative, but no one was present in December, and I'm very pleased, Gerald, to be able to present a 15-year plaque to Lauren for the time work that
I'm sure we'll find a place for that,
Mike.
prominent. There you go, Mike. Hey, everybody give Bill a hand, will you?